Hello, everybody. It's the 21st of August. Thanks for tuning in. So everybody wants to know the same thing, have the equity markets bottomed? And, and I think that if you look at existing trends, still very tough to make that case. I just look at not only trends of S&P along with QQQ. Momentum has gotten to near overbought levels on hourly charts, but yet downtrends are still very much intact from the latter part of July. So normally the way I do this is just that, we have had a little bit of a bounce, but as of now, interest rates still pressing higher. We didn't see any reversal in that. If anything, yields are up above levels that were made last October. So that's a little bit challenging in terms of how you view that. And I just want to show initially, here's the S&P level. I think that right near 4440 for me would really be the first real proof that we could be bottoming. We need stabilization. That's the bottom line. So trends, momentum's still negative. We're not really oversold. We don't have any DeMark type buys, and downtrends are still intact. And so it's really important not to get too caught up in a little bit of a bounce off the lows, particularly given that rates are still pressing up. And I think that's really the big thing. When I look at just charts of how the 10-year looks, and at 434 now, we are clearly above this prior level. I look at a couple different things. One is based on, DeMark counts on TLT, on TNX, TYX, on different weekly, monthly, daily. Most of those show us to be about 2 weeks away. But at a minimum, we could see a daily signal literally within the next 4 days, which would bring us right into Jackson Hole this week. So my thinking is the next couple of days, the risk reward is certainly not good to continue to be short treasuries on this big move up. We've moved now about 100 basis points just since the beginning of May, higher in yields, and getting to levels where most people would say, oh, it's a technical breakout, but yet a lot of signs of different cycles and sentiment seasonality favoring that treasuries should rally during this period. And, I just am real hesitant to really join Ackman and think we're going to 5%. I think that that's going to come over time. But for the time being, yields are extended, and it's more likely that we start to turn back to the downside. Outside of that, I just thought it was important to mention that when you look at some of the defensive sectors, we really have not seen any evidence of these strengthening whatsoever during the sell-off. A lot of these are yield-sensitive type sectors, but when I view things like staples, we've actually broken prior lows from May, as well as gotten down under, as of a closing basis today, the lows from March. So this really puts us at the lowest levels we've seen since last October, and not only staples, but also looking at utilities, looking at REITs, and the defensive sectors just simply aren't working. And when the market sells off, but yet tech is holding up better than utilities, then that usually is a pretty optimistic sign that one wants to buy dips. That being said, I don't know that we can say we're there without any evidence of yields reversing or equities getting up above downtrends. So we just simply have to hold off and wait until this, until we see further proof, and then we can really say with some conviction that I think it's time to start to move up. At this point, ahead of Jackson Hole, I think it's tricky to try to get long without that proof. And so it's going to be right to be selective. I think we have about another 1 or 2 weeks, and we need to let prices start to stabilize a little bit and see a few more things that would give us conviction. So I'll certainly be there and watching and try to relay as I see. Thank you for tuning in, everybody. Have a great night.